Thanks, Martin. Good afternoon. For those of you that I don't know, my name is Fiona Reynolds. I'm the Managing Director at the PRI, and I'd really like to welcome everyone here to the PRI's hometown of London. It's fantastic to see so many people who've turned up for this event. I know Martin was talking about 900, but we had a bit of a surge at the end of this last week or so. So I think we're actually, over the next couple of days, we'll see more like 1,100 people at this event. So it truly is the biggest responsible investment conference that's ever been held. And I just think that that shows that responsible investment is an inevitable agenda, and it's gathering more and more momentum all the time, which is fantastic. So over the course of the conference, we're going to hear from 160 speakers across 40 sessions. We've really tried to think about diversity in terms of putting the program together. So when Kat and the team have been looking at the program, we wanted to make sure that there were speakers from all different countries. We wanted to make sure that there was gender diversity, and we wanted to make sure that there was a lot of asset owners speaking as well, because that was something that people fed back last year to us, that we didn't have enough asset owners. So 80% of our speakers are new speakers this year, which is great. We've also got 35% who are female. We'll be always continuing to get that up at least 50% as time goes by, and 35% of the speakers are asset owners as well. We're covering a whole range of issues. We're looking from megatrends to asset class work to engagement work and all different ESG initiatives. And I really think that there is definitely something for everyone in the program. But before we get started with our keynotes, I just want to give you a little bit of an overview of this year's report on progress. So for those of you who are new to responsible investment and new to the PRI, and I know that there are quite a few of you who are here today who are attending for your first time, having just become signatories over the last 12 months. So all of PRI's investor signatories have to report on their responsible investment activities on an annual basis. And that's really important about transparency and accountability, not just about the PRI, but about individual signatories. So what comes out of the report on progress that we put together each year is really the definitive report card by our industry and it provides us with a wealth of information about what's happening and what are the things that we need to see more progress on. So I'm going to go through some of our high-level findings. Firstly, again this year, the report tells us that fixing principal agent problems requires asset owners as principals to change the way that they contract with and instruct their managers as agents. To be able to do this, asset owners need better information about their managers' responsible investment activity, and they need to factor this into the selection, appointment and monitoring of their managers. At the heart, really, of PRI's reporting and assessment process, what we're really trying to do is to place the right information at the right time in the hands of those who make the investment decisions, so that we can deliver better outcomes. Some of this information might not be the most exciting way to start a conference, I have to say, but the information that there is really important that we keep in mind as we're having our discussions throughout the conference. So as the PRI approaches its 10th anniversary, it's encouraging to see that more investors are embracing responsible investment than ever before. At the end of March this year, the assets under management of our signatories reached nearly 60 trillion, up from 2 trillion when the PRI was first launched in 2006. And we had 220 new signatories over the course of the last year. The numbers, however, don't really tell the whole story, and they need to be put in context. They sound like great headline figures, and they are great, but there's more to it than that. PRI asset owner signatories represent only 19% of the global asset market. Of this, around 70% of our asset owner signatories are in Europe. And while there is, of course, innovation and leading asset owners across the globe, the report does indicate that European asset owners are really driving the market of responsible investment. and implementation globally. And this is something that the PRI is really determined to expand as we try to take responsible investment across the globe and make it a truly global issue. The PRI's market penetration when it comes to investment managers is, of course, far higher. PRI signatories account for 63% of assets managed by investment managers globally. And we will no way try to pretend when we talk about that $60 trillion that it's all managed in a responsible way, in a way that incorporates ESG factors. And as the report tells us, while progress is definitely being made, and it is being made, which is great, there's still a long way to go, and we've got a lot more work to be done. So this year we analysed the responses of 936 signatories across 48 countries. There were 245 asset owners and 691 investment managers. First, I just want to look at how investment managers have progressed over the last year in listed equities, where responsible investment activity has had a relatively long history. It's no surprise really that listed equity is the most commonly held asset class for PRI signatories. 98% of investment manager signatories report in this asset class, which implies that we may be approaching a saturation point. On deeper investigation, however, while awareness is really widespread and we've got 98% of people reporting on it, implementation is actually quite shallow. We can only say for certain that 56 investment manager signatories, or just 16% of those that hold listed equity, are systematically integrating ESG issues into fundamental analysis and documenting the influence on these factors. So again, a long way to go. Good headline figures, but a lot more to be done. Clearly, investment managers need more information and guidance, which is what the PRI is seeking to do in our asset-specific work. And we're rolling out new asset class work and deeper implementation work all the time. The reporting data also allows us to drill down to see where asset owners and investment managers are evolving their practices as well. So you'll see that in 2015, our data shows that fixed income has well and truly come of age. It's a positive sign that the world's largest asset class, estimated at 82 trillion worldwide, is really starting to embrace ESG integration. The growth is particularly striking for asset owners. In the last year, we've seen a 5 to 10 percentage point increase in responsible investment activity, making it the fastest growing area for our asset owner signatories. One of the things that we did this year, because it's such an important year for climate talks, was do a special report out of the information in the report on progress. So I just want to touch on some of the highlights for that came out of it about climate change activities for our signatories. So this year, the report on progress, what we did to analyse this was looked at all of the free text that's actually provided about activities that people are undertaking in the environmental space when they report to the PRI. So I just want to, as I said, talk a little bit quickly about what does it tell us? What does it say in a nutshell? So it tells us that many signatories are beginning to consider climate change. 56% reported on their activities. However, only 9.5% showed detailed consideration, and less than 1/3 of signatories reported having a policy on climate change, although on a positive side, many indicated that they'd be doing so over the next 12 months. This suggests that although signatories are aware of the potential significance of climate change, the majority are either not regularly considering it as a factor in investment policy or decision making. Everyone in this room knows that climate change, water risk, and all the other sustainability questions cannot be effectively addressed by governments and policymakers without the active support of the global financial system and the global financial players, the 1,000 people that are sitting in this room. Of those in the report that did mention climate change, their responses were mainly on mitigation actions. The most commonly addressed cited examples were supporting climate-focused initiatives such as CDP, IIGCC, etc. Then investing in companies offering solutions to climate change such as clean energy, low carbon technology or infrastructure, and screening such as against fossil fuel investments or for companies performing well on climate change. Signatories overwhelmingly favour collaboration when it comes to engagement with policymakers, and that appears to be true for climate issues as well. Endorsing written submissions was most frequently cited by our signatories as a method for engagement on climate change, including statements supporting global actions such as the Investor Statement on Climate Change or the World Bank Statement on Carbon Pricing, as well as letters targeting national governments or regulators. And earlier this year, PRI and a number of the climate groups got together and we sent letters to the G20 and the G7 ministers urging them to take action, and hundreds of our signatories have got involved in these activities and have signed on. In addition, our signatories reported that they are setting performance objectives on greenhouse gas emissions and using the data to estimate climate risk. They're also seeking to understand their portfolio's carbon footprint. In the main, many having committed to the Montreal Carbon Pledge. And as I said earlier, if you're at the SGM, we have 72 signatories to the pledge, representing 5 trillion in assets under management. And we hope that number will continue to grow and grow as people are ready to take the next step, look at their carbon footprint, measure it, and use it as a way to have discussions in your boardroom about what actions you're going to take. And those actions will be different for different pension funds. I really just want to spend a few minutes on climate-related engagement activity, because this is one of the areas that PRI is continuing to play an active role. Some of you will be aware of an ongoing PRI coordinated engagement to improve disclosure on corporate climate lobbying practices. Those of you attending last year's conference will probably remember that Christiana Figueres, the Executive Secretary of the UNFCCC, called on PRI signatories to ensure their lobbying activities and those of the companies and organisations within their sphere of influence were supportive of climate action. Lobbying by companies against strong climate policy is obviously incompatible with mainstream portfolio value for maximising portfolio value for our beneficiaries over the longer term. However, listed companies are involved in such lobbying indirectly via their trade and industry associations, despite what they might be saying publicly about climate policy. So PRI was really determined to get involved in this issue and take up the challenge that Christiana laid to us all when she was at the conference last year. And we launched an investor working group on corporate climate lobbying, and it's a coordinated engagement that we're undertaking with investors and companies. And there's 3 different groups working. So we've got a group in the US, we've got a group in Europe, and in Canada, and we've got a group in Australia. Finally, PRI worked with a number of climate groups to develop the Investor Platform for Climate Actions, which was launched at Climate Finance Day in Paris earlier this year. And the platform really provides an easy reference point for all of our signatories, for all investors who actually want to take some actions but need some inspiration about what to do. And the platform showcases 17 initiatives by 400 investors across 30 countries, and it represents $25 trillion in actions. So I would really encourage you to have a look at the platform. All of us can at least take one action that is outlined on the platform. And we'd really like to see people to continue to put more activities as you're doing new things on the platform. One of our aims is to make sure that policymakers and others know that investors care about these issues and that investors are taking action on climate change. We want to be able to gather all of this information and provide it at the COP21 to show the investor side of the equation. So just to wrap up, what does all of this really mean and all of the things that came out of the report on progress? Because it's really about the moving from awareness to impact. How are we going to get to see that? 10 years on, as I said in the beginning, there really has been a lot of progress on responsible investment, but there is a lot more to be done. What the report tells us, and it tells us a lot of information, and I would really encourage you to dig into the detail of it. We're going to be producing some asset class specific reports on progress and also some country-based ones as well. So there's a bit of a goldmine of information there. But for me, in looking at the report, the things that it tells me is firstly that asset owners need to strengthen their responsible investment strategies. As a starting point, far too few asset owners actually have written down investment beliefs. Secondly, asset owners in particular need to consider specific responsible investment strategies when they're selecting their managers and write ESG clauses into contracts. Asset owners must ensure that there is an alignment of interest between themselves and their managers, and their mandates need to reflect this alignment of interest. Owners must also undertake ongoing monitoring of their managers' responsible investment activities against the mandates. These are all really important actions if we're going to get movement. Owners need to think about putting incentives in place as well to encourage ESG integration. This means providing incentives for managers and other financial professionals in the industry. And all investors, of course, must develop strategies for transitioning to a low-carbon economy. Regardless of what happens at COP21, the climate issues are not going to go away, and investors can really no longer afford to put off taking action on climate change. I know that I've talked about a lot of action for asset owners, but that's because I truly believe that asset owners are the ones who drive the responsible investment agenda. At the end of the day, they are the ones that put the mandates together, and they're the ones that pay the fees, and they're the ones that need to talk about what they want to see, make sure they're embedded in contracts, and make sure that the ongoing monitoring is there. It sounds simple. Lots are doing it really well, but there's still a long way to go before all of our signatories are doing it. And one of the things that we've just started from looking at the reporting framework last year and seeing that this is an area of work that we need to do more on is develop a new asset owner work stream. We've employed our first staff member, Don, for that team, and we're going to keep adding to that team. We want to provide asset owners with some great tools and continue to work with them to move this forward. Our aim is really, with the report on progress, to be able to see small changes every year. We don't expect people to run before they can walk, but we want to make sure that we see progress on an annual basis. So I would really encourage all asset owners to sit down with their managers using the PRI assessment reports as a starting point. Use them as a way of having a conversation about how your managers are going. And I would encourage managers also to look at their reports and look at the areas that they need to make improvements. We've been running assessment sessions across the world to talk people through the reports and the assessments and how they should be used, and to help them go to the next stage, and that's something we're going to continue to do. So thank you for listening to a little bit out of the report on progress. There's some more sessions that will go into much more detail about the data. As I said, there'll be some asset class specific work coming out, and there'll be also coming out some regional data as well. So I really hope that as you go through the conference and you hear our speakers and you hear what people have got to say about responsible investment, that you keep in mind some of the key points that we're trying to make about where we need to see improvement and how we can all contribute to that. So with that said, we're going to move on. But first of all, it's my great honour to introduce a man who will come up in a moment, but he's someone who really needs no introduction at all, so I'm not going to tell you who he is. Thank you.